Are housing prices about to head lower? There's a lot of headlines out there reading that buyer demand has slowed, and therefore, because of that, you're going to see a drop in housing prices. In today's video, we're going to talk about that in a little bit more detail. We're primarily going to focus on the California housing market at the moment, but understand, regardless of where you're located, you're likely going to see similar trends as to what California is seeing. And so even if you're not in California, the information here might actually help you because, if you're just reading headlines out there, it can be overwhelming. It can be shocking. It grabs a lot of emotion out of you because it's meant to, right? But today we're going to dive into what the details of slowing buyer demand actually means and talk about what it means moving forward. We're going to take a look at the latest May home sales report in California from the California Association of Realtors. We're going to break it down, talk about what it means. We're going to talk about, the recent decline in buyer demand. We're also going to talk about the inventory changes and how all of this might affect the housing market, the real estate market as we move forward. My name is Jeb Smith. I'm a real estate broker here in Southern California. My channel's all about real estate. If you find the content valuable here, do me a favor and hit that thumbs up. So let's take a minute, pull up this report. I've taken the time to highlight a couple of things that I feel like are the most important here, as I always do, but I've put a full link to the article below if you want to read it in its entirety. So let's take a minute here and pull up the report and go over it. So, the highlights here: existing single-family home sales totaled 445,660 in May, and that's down 2.7% from April, but it's up 86.7% from May of last year. Understand, May of last year, just coming out of, the beginnings, if you will, of the pandemic. So sales at that time really hadn't started, hadn't started picking up at that point. So the big jump in sales isn't really anything that I would focus on at the moment until we get later in the year when the numbers started to normalize. That's when I would really start to pay more attention to that. But May statewide median home price was $818,260. It's up another 5% from April and up nearly 40% from May of last year. Again, the May number, not so important, but even with sales declining, buyer demand down, we're still seeing that increase in the median home price. Not at the levels that we were seeing prior to this, but we're still trending up. The president of the California Association of Realtors, David Walsh, made the statement of the overheated housing market is showing signs of a much needed cooling and could be a sign of waning buyer interest as the torrid pace of home price increases and buyer fatigue adversely affected demand. So I might argue that just a little bit because, we're going to read in the report here how buyer demand is down, but yet we're seeing an increase in certain price points, in the luxury price points, home prices over $1 million, but yet we're seeing a decline in home sales under $500,000 or what have you. And it's because there's not a lot of property out there, right? I mean, you can't sell properties that aren't there. And while what he said is true about the home price increases, yeah, you're losing buyers because home prices are rapidly appreciating and you're pricing some of these buyers out, but you're not, in my opinion, you're not getting a slowdown because people don't want to purchase. You're getting a slowdown because, one, people can't find the right property. Therefore, they can't buy it because supply, while it's increasing a little bit, it's still not at the levels that we need it to be. And secondly, even though, people are wanting to buy, at some point they reach a point where, they can't afford what it is they're looking for in a home, and therefore they're sitting on the sidelines. I think that is definitely playing a part of it. But I do think as inventory increases, that buyer demand is going to stay there. I don't know that we're going to see any big declines, but what I do think is as inventory increases, less craziness in the housing market, which means not necessarily lowering house prices, but just housing prices not selling at the levels that they're selling, because we're going to look at, the price to list ratio here in just a bit, and you're going to see how, we're still selling it, over 100% of listing price. as more supply comes, if even if demand backs off a little bit, I still think you're going to see those numbers sell close to the asking price. You're not going to see any huge declines, but you might see a little bit of moderation in the craziness out there. But let's go on here and just read a little bit further. So the year-over-year price gain was the highest ever recorded. And it was the second straight month that the state recorded an annual increase of over 30%. So year over year, the market is still doing very, very well, as we know. Robust demand of higher priced properties contributed to the record-setting statewide median price, with $1 million home sales surging more than 200% from May of last year. Its market share is nearly double what it was a year ago when it was 15.6%. More $1 million properties were sold in the past couple of months than homes priced below $500,000. I mentioned that earlier. That's because there's not that many homes priced under $500,000 now. You can't sell homes that aren't there, so you're likely to see other growth in other areas of the housing market, because if there were $500,000 homes out there, trust me, they would be selling. I have people that would buy them all day long. The problem is they don't exist, and that is part of the problem. The housing affordability is an issue. Despite strong growth rates, the level of home sales has fallen on a monthly basis in 4 of the last 5 months. So for the last 5 months, demand has gone down. The media wants to portray that. The housing market is crashing. Nobody's buying, but yet we're still seeing appreciation in homes. Supply hasn't really changed that much. Overall, it has increased a little bit, which we're going to talk about, but overall, the fundamentals in the market are pretty much the same. At the regional level, all major regions had at least 44% year-over-year growth in sales from May, when the market hit its lowest point in 2020. Among all regions, the Central Coast had the biggest jump of 111.8%, so almost 112% in the number of sales from a year ago, with sales in all 4 counties in the region surging by more than 99%. The Bay Area increased sales by triple digits, followed by SoCal, where I am, at 80%, the far north at nearly 59%, and the Central Valley at 44%. Nearly all counties, 49 of 51, recorded a year-over-year sales increase in May, with 17 counties more than doubling the sales levels reached a year ago. Mono had the strongest sales growth from last year at 400%, followed by Plumas and San Benito. Del Norte, Glen were the only counties with a sales decline from last year. Sales growth remained concentrated in higher price markets. We talked about this a moment ago, with home sales in the lower end continue to be lackluster. Demand in the higher $1 million segment increased by more than 200% year over year. We talked about that. Sales of properties priced below $300,000, on the other hand, continued to fall precipitously, with the year-over-year sales dropping 34%. Again, it's because there's no houses out there. 3 out of the 5 major regions reached new record median prices in May, with each region growing more than 20% from a year ago. San Francisco Bay Area had the highest year-over-year gain of 38.9%, SoCal 33.1%, Central Coast 32.6%, and the Central Valley 27.1%, and the Far North 22.1%. All 51 counties notched a gain in the median price on a year-over-year basis. The Unsold Inventory Index improved slightly from 1.6 in April to 1.8 months in May. So inventory went from 1.6 months last month to 1.8 months. So inventory is increasing a little bit, not enough to really change the fundamentals of the housing market. In fact, this week, Dr. Lawrence Yoon, chief economist of the National Association of Realtors, came out and said that we are behind 5.5 to 6.5 million homes on a nationwide basis. So we are well below inventory levels that we need to be. And even this year, with builders building nearly 1.7 million homes and what they're expecting next year, we're still well below the amount of homes that we need, with the population growth and people coming into purchasing homes. So inventory levels have to increase substantially in order to really change the dynamic here. The median number of days it took to sell a home in California, still super, super low, remained at 7 days. It was 7 days last month. It's 7 days this month. As I mentioned in the last report, understand 7 days, that's when it opens escrow. That's how they, it changes from active to pending in the MLS. Just think, there's negotiations included in that 7 days. There's some going back and forth. So really, the real number is probably homes are selling in like 3-4 days because of the going back and forth and counter offers and what have you to solidify a deal. So homes are selling very, very quickly. I tell you this because if you're interested in looking at a property, you've got to make time to do it up front. You got to be quick. Time is of the essence, and that's not to put pressure on you to do it. It just means if it's the right house, make the time. Otherwise, it's going to go very, very fast. I have people reaching out to me all the time saying, hey, I'd like to see this house. And by the time I call, it already has multiple offers and or it's sold. So just keep that in mind. 30-year fixed interest rate dropped to 2.96%. It was 3.3% in May of last year. And it was, just around 3%, just over 3% last month during the report in April, I believe. So it's come down a little bit. Mortgage applications this week actually picked up. And a lot of people want to reach out and say, hey, mortgage applications are down. That means nobody's buying. Well, it means that, buyer demand has slowed a little bit, but are mortgage applications down because rates have gone up a little bit with regards to refinances and people aren't refinancing? Has it gone up because people aren't buying because there's no property out there? You got to put the facts behind it. Don't just read the headline, right? And think that the market's going to crash because of that. California single family home, May of this year, 818 versus 814 last month. This year, last year, this time, 588.70. Wow. That's a huge change in the single family home. And condos went from 592 this May to from 464 last year this time. Southern California, my market. Clearly, if you're in the Bay Area, some of these other markets, you can see what's happening here. Numbers, San Mateo, super impressive. $2,075,000 median home price in May versus just over $2 million last month. It was at 1.65 last year this time. You're seeing 39% price year over year change in the single family home, 27% condo. San Mateo 26%, Napa 25%, Contra Costa. I have no idea how to say that. I probably should since I live in California. 48%. I mean, that's huge. $1,015,000 from $690 last year. These are big numbers. Anyway, SoCal. Los Angeles went from 718 last month to 725 this month. Orange County stayed the same. And you got San Bernardino, 410 versus 320 last year. 560 versus 434 last year in Riverside. San Diego, 851 versus 655 in Ventura. Ventura actually went down month over month. Last month it was 865. This month is 806. Why is it going down? Less properties for sale. Buyer demand dropped. Hard to say at this point. But that should give you a pretty good idea of what's happening there. Now, this is the Unsold Inventory Index. California single family home, as we mentioned, 1.8 months. Los Angeles 1.9 months, or the metro area versus 1.7. But you can see Orange County, where I am, Huntington Beach, 1.6 months versus 1.5. Not a big change month over month, but you can see here, Alameda County still at 1.3 months of inventory. Contra Costa, 1.2 months. So inventory levels are still low on, across the board. Glen, for example, in the Central Valley has a little bit more inventory, especially versus last month. Inventory is nearly tripled since last month, but that's not the norm for most of these areas. Del Norte. So Del Norte, 9.9 versus 3.1. Inventories increased quite a bit. And you can see Lassen, same thing, right? I believe these were both areas that didn't fare well overall with regards to the report, that I mentioned earlier. So, what's going to happen in California here as we move forward? I think you're going to see more property come on the market. Finally, the California opened up this past Tuesday, which means, more people are going to be out and about. I think you're going to get people more comfortable, with listing their homes now if they were worried about the pandemic prior to. That means more inventory coming to the market. Now, does that mean that you're automatically going to see, prices come down? Not necessarily. It just gives home buyers more options to choose from if they're out there looking. Now, you might see less craziness in the housing market, right? If you only had one house in a certain tract and there were a lot of buyers that wanted it, that's where you saw the multiple offers, people bidding way above the asking price in order to get it. Now, if a couple of people are listing their homes in that tract, you might not get, so many offers on one property. You might get them spread across a couple of properties, which, just means maybe, less egregious sellers in some cases willing to not, have such crazy terms if they have some competition. But I don't think it means anything really substantial with regards to the dynamic of housing. I think supply is a good thing. As a real estate agent, I would love to see more supply. I think it's good for buyers. I think it's good for sellers too. I mean, as much as they don't want to hear it, it is, because the more we see this craziness with crazy numbers, double-digit appreciation. Long term, that's not a good thing. And if you're just selling and getting out of the market, yeah, I can see you, wanting, the most amount, the craziness. But if you're a seller and also a buyer, it's a catch-22, if you will. But, normal appreciation, 5, 6, 7% would be a really good thing. So hopefully more supply comes to the market, slows it down a little bit, gives people an opportunity to get in and get some stabilization. Otherwise, you've got these crazy increases, and it's not as good as it is for sellers. I think it would be a much better situation for everyone if it just slowed a little bit. But it's hard to say what it actually means. I'll continue to update you as information comes out. If you have questions for me, do me a favor, leave them in the comments below. As always, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.